Hey traders, it's John Fortune here with this week's weekly Forex forecast for the 6th of July to the 10th of July 2020. As always, we're going to start off by looking at the US dollar index and crude oil before running through a number of markets, looking at the key levels of support and resistance in the process. We're also going to be highlighting some of the targets that we're going to be looking for in this coming week and also for future weeks. So I hope you're having a nice weekend. Let's jump over to the charts and see where the money is this week. As always, we're going to start off by looking at the US dollar index. Now, for the last couple of weeks, we have noted that the US dollar index is in a corrective phase, and this has caused a lack of volatility in the markets across the board in general. This does not go on forever. It will eventually break one way or the other. However, for the time being, we are still stuck between the range which we've highlighted in previous weeks of the 96.60 and the 97.95. It may be in a bullish reversal transition period. However, this will only really be confirmed, at least to us, above 97.95. Unless we break the 97.95, we're still going to be considered this in a range, or if we can break the 96.60, we'll start to look further declines to the downside and we'll be viewing this as bearish. As it stands, therefore, going into this week, we actually have a neutral bias on the dollar once again. And what this just means is it just means we're not going to be using the dollar index in any significant way this week to create a bias in the dollar pairs, and we'll be trading the individual markets on their own merit without a strong bias in the dollar one way or the other. So the next market we're going to look at is crude oil. Now, last week we started the week down in this area and we were looking further advances to the upside. We did start to move to the upside because of a lack of volatility in the dollar index itself. And don't forget, oil is priced in dollars, so therefore the US dollar does affect the oil price as well, inversely. And we've just been grinding to the upside because of this lack of volatility, but we have been moving to the upside. We have not taken out the target as of yet at the 40.93. So very simply put, anybody not involved from this pullback last week, what we'd like to see is for repositions or new positions in this market, any pullback in this area, once again, is going to be viewed as an opportunity to start to look for bullish setups. And we're going to be looking at initiating longs up towards the next key of resistance, the upside and the target set at the 40.93. And if we can get a break through here, we're going to be looking up towards the next key of resistance, the upside and target 2, at the 43.69. So the next market we're going to look at is euro dollar. Now, last week we started the week in this area, and this is all we did last week. We moved up, down, and we ended the week here. So we really did not move at all last week. There was a serious lack of volatility in euro dollar because of the lack of volatility in the dollar itself. As a result, we're still going to this week favoring bearish setups in euro dollar. You can see we have had a near-term reversal confirmed to the downside, and the market overall is still structured to the downside. So any further pullback in this area this week towards the 1.13140 is going to be viewed as an opportunity to start to look for bearish setups. And if we get these kind of bearish reversal patterns in this area, we're going to be looking at initiating shorts down towards the next key of support to the downside and the target set at the 1.1147. And if we can get a break through here, we're going to be looking down towards the next key of support to the downside and target 2 at the 1.1009. So the next market we're going to be looking at is pound dollar. Now, last week we highlighted the 1.2300 as a key of support in this market, and we did come down and take out this target set from last week. We actually bounced from this area and we pulled all the way back to the key of resistance highlighted from last week at the 1.24740, and we finished the week right here. Very simply put, as the downtrend is still intact and we don't have any clear directional bias in the US dollar itself this week, this pullback here and this sitting right at this key of resistance, broken support from the past, turning resistance here is viewed as an opportunity going into next week to start to look for bearish setups. And if we start to get bearish reversals in this area, we're going to be looking at initiating shorts down towards the next key of support to the downside and the target set from last week, the 1.2300. So we're going to look for another run down towards this key of support. And if we can get a break through here, we're going to once again be looking down towards the next key of support to the downside and target 2 at the 1.2076. So the next market we're going to look at is US dollar Japanese yen. Now, last week we actually bounced from the 106.720. You can see we failed to break support here, failed to break support here. We had a false break to the downside, and we may actually now be forming an inverse head and shoulders if we come down and retest the 106.72. So this is a reversal to the upside in US dollar yen. Any pullback in this area, therefore, especially if we come back and retest broken resistance from the past, turning support once again at the 106.72. This would be a great place next week to start to look for bullish reversals. And if we get the right kind of bullish reversals in this area, we're going to be looking at initiating longs up towards the next key of resistance, the upside and the target set, with the 109.01. So the next market we're going to look at is Aussie dollar. Now, as we highlighted last week, the uptrend in Aussie dollar is still intact, so we do favour bullish positions in this market if we are looking to trade this next week. This will not change as of yet unless we break this low. If we break this low, we will actually have a near-term reversal in the Aussie dollar and we'll start to look for short positions. As it stands, what we're actually doing is we are actually contracting and coiling, and we are making this is a high, this is a lower high, this is a lower high, and conversely down here we have a low and we have a high low and we have a high low. So this is still coiling, this has not broken out yet. So what we'd like to see going into next week is, if we are going to look for bullish positions in this pair, we want to see it break this high over here so it starts to make higher highs in the overall uptrend. Any break of this high over here will actually give us an opportunity to start to look for a pullback, and any pullback in this area next week is going to be viewed as an opportunity to look for bullish setups. And we're once again going to be looking at initiating longs up towards the next key of resistance, the upside and the target set, and the 0.7132. Now you can see this coiling pattern really just underlines the lack of volatility in the dollar, and this actually makes trading conditions much harder. So if you are trading this next week, or you're trading the dollar pairs or the markets in general next week, just bear in mind we do have a very low volatile period at the moment, and it's probably a good idea to manage risk around that and take less risk until we start to get breakouts or we start to see some directional play, at least in the dollar if you're trading the dollar pairs. So the next market we're going to look at is New Zealand dollar. Now last week we started the week in this area and we highlighted the fact we're looking for further advances to the upside in this market. We did get a move to the upside in New Zealand dollar, but it was kind of capped. It wasn't a big move because of the lack of volatility in the dollar itself. Very simply put, going into this week, we're still focused on bullish setups in New Zealand dollar. If or unless we break this low, similar to the Aussie dollar, this will be a near-term reversal to the downside and we'll start to look for short positions. As it stands, we've not broken this low, so we are once again looking for further advances to the upside in this market. Any pullback in this area next week is going to be viewed as an opportunity to start to look for bullish setups in this pair. And we're going to be looking at initiating longs up towards the next key of resistance, the upside and the target set, at 0.6643. So the next market we're going to look at is US dollar Swiss franc. Now last week we were looking further declines to the downside. We started the week in this area and we did end up lower on the week in US dollar Swiss franc. However, we more or less moved nowhere last week because of the lack of volatility once again in the US dollar. We're looking at US dollar pairs here. So the US dollar itself is affecting all of these pairs. Very simply put, going into this week, we are still focused on further declines in this market as the better setups to look for. Any pullback this week towards the key area of broken support from the past, turning resistance once again at 0.94990. Any pullback towards this area, preferably as well if we can get a retest, as this will give us the deeper the pullback, the better the risk reward setups. This is going to give us a great opportunity next week if we get this price action to start to look for bearish setups once again. And we're going to be looking at initiating shorts down towards the next key of support to the downside and the target set, the 0.9319. Now, if you want to take a more conservative target going into next week, you can also look for this low because we may end up getting a bounce of the lows. So if you want to look for a more conservative target and not all the way down to the 0.9319, you can look for this low as a target next week. So next market we're going to look at is US dollar CAD. Now last week we started the week in this area and we highlighted the 1.35430 as an area to look for a pullback. We have now pulled back to this area and this therefore gives us a great opportunity to start to look for bullish setups in this market. And if we can start to break out to the upside, if we can get the right kind of bullish reversal patterns in this area, we're going to be looking at initiating longs up towards the next key of resistance, the upside and the target set, with 1.3865. Now, very similar to US dollar Swiss franc, it may actually take a couple of weeks to get all the way up to the 1.3865 if we are going to come up to here. So if you want a more conservative target, you can always look for the highs and the lows. In this case, the 1.3720 would be a conservative target going in for next week. And last but not least, we have gold. Now, last week we were looking further advances in this market and we did have a nice move to the upside. We came very close to the 1794.98. But we didn't quite tag it and we started to pull back instead. So very simply put, going into this week, we are still focused on bullish setups in this market, although we're lacking a bit of momentum as we start to grind to the upside with that lack of volatility in the dollar. What we'd like to see is any further pullback and retest of the 175868 in this market is going to be a great opportunity next week to start to look for bullish setups. And we're going to be looking at initiating longs up towards the next key of resistance, the upside and the target set from last week, the 1794.98. And if we can get a break through here, we're going to be looking up towards the next key of resistance, the upside and target 2, at the 1827.12.